Hello everyone, today I will be discussing the debit-credit framework and how to write journal entries. Now, I'd like to begin this discussion with two very important equations in accounting. Assets equals liabilities plus owner's equity, and debits equals credits. Now, assets are things of measurable value that the company owns that are expected to benefit the company in the future. Liabilities are measurable amounts owed to creditors, such as banks or suppliers. And owner's equity is owner's claims on the company, and then debits and credits are the two elements of our journal entries. Now, how these equations work is they must balance, which means the left side must equal the right side at all times. So how this works is that assets always increase with debits and decrease with credits, and liabilities and owner's equity always increase with credits and decrease with debits. So now I'm going to do a few journal entries to show you examples of how this equation works. So the first one, I'm going to hypothetically pretend that we're starting a new company with these journal entries. So the first entry I'd like to show is an issuance of stock to owners. So for this entry, we're going to increase our cash, which is a debit, which is an asset, so we're going to increase it with a debit, and we're going to say the amount is $50,000. And then we're going to credit our contributed capital amount, which is an owner's equity, so we need to increase it with a credit. So contributed capital would also increase $50,000 here. And then when making journal entries, it's always important to indent your credits. Just like this, the tab key on a computer if that's what you're using. And we can see this equation works because an asset account, cash, increased by $50,000, and an owner's equity account, contributed capital, increased by $50,000, and debits equals credits. Please remember, cash is assets increased with debits, and owner's equity and liabilities, which weren't in this journal entry, would increase with credits, so both sides increased by $50,000. Now the next journal entry I'd like to show is invest in equipment. So for this journal entry, since we're purchasing equipment, we're going to debit equipment, and we're going to say the amount is $40,000. And then we're going to credit cash. We're going to say we purchased all of this with cash. So $40,000 credit. So in this journal entry, it's unique, because we only worked with the assets side of the equation. As you can see, it's still balanced, because we increased assets for $40,000 with the increase in equipment, but then we decreased it with the decrease of cash. So there was no net change in assets and no net change in liabilities or owner's equity, because the asset increased with a debit, but then it decreased with a credit. So now the next journal entry I'd like to show you is getting a loan from a bank. So for this one, usually they sign promissory notes with a bank. So that account is called notes payable, as opposed to if you're buying something on account from a supplier, that would be accounts payable. Usually it's not as formal, and that's the only difference. So for this journal entry, since we're getting a loan, we would increase cash with a debit, and we're going to say that this was a $20,000 increase. And then we would credit a liability account from notes payable for $20,000. So as you can see, both sides increase by $20,000, assets increase with debit by $20,000, and liabilities increase with credit by $20,000. So now, I would like to show a journal entry displaying, oh sorry, my computer is not really working here, let's see. So the next entry I would like to show is investing in equipment, except purchasing the equipment on account as opposed to purchasing cash. So here, once again, we increased equipment, so debit equipment since it's an asset account, and we're going to say $10,000 worth of equipment. And then we didn't spend cash, instead we're promising to pay the money later. So that would be an accounts payable. So we increased the liability account, accounts payable, also by $10,000. And don't forget to always tab over your credits. And now the last journal entry I would like to show is a payment of the accounts payable in the previous journal entry. So what we would do here is we would decrease the liability accounts payable, which means we would debit it, since liabilities decrease at a debit. So we would debit it $10,000, and that would get rid of this liability in the accounts payable. And then we would also decrease our cash, which is an asset, so decreases it with a credit of $10,000. And then don't forget to tab them over as always. And you can see both sides decreased by 10,000, so it stayed balanced the whole way through. So if you guys have any questions, feel free to leave them in the comments section down below, and I will see you guys next time. Thanks for watching.